Insurance agents who sell health insurance products have seen their commissions go down significantly over the last year, thanks to changes in the federal healthcare reform law, or medical loss ratio rules, that restrict the amount insurers can pay agents. It's a major issue for those who sell group health.
The medical loss ratio provision has been a disaster for independent agents and brokers that sell particularly group health insurance. Agents have been getting notices from health carriers of commission cuts of 50% or more, but the workload continues to go up. And so it's a big problem. We worked to have a bill introduced in the House of Representatives by Congressman Mike Rogers from Michigan. The bill has been introduced. It has a number of bipartisan co-sponsors to exempt agents and brokers from the MLR formula. In other words, agent commissions would no longer be considered part of the MLR formula for an insurance company. That would take away all of the justification for cutting agent commissions by health insurance companies. We believe that commissions are a pass-through. It's not company revenue, and it has nothing to do with the MLR formula and what the sponsors of that provision were trying to get at, which was to reduce company costs and have costs of premium go down for consumers. So we're going to work hard on that. Again, it's something that the president is not wild about, so we're going to have to do a lot of education with the president and a lot of senators. But we think it is crucial to try to get some fix for independent agents in the group health insurance marketplace, because right now it's not sustainable what's happening in the marketplace for independent agents.
Well, the Affordable Care Act had a whole plethora of provisions that are problematic for our membership, but our focus for this legislative conference is on the medical loss ratio requirements. And this is a regulation that has already gone into effect, so it's very different from some of the other provisions of the PPACA. This is having an impact as we speak. And what the medical loss ratio does is it limits the amount of premium that the insurance companies can spend on advertising, on administrative costs, on what are considered non-claims costs. There are different rules for small group and the individual market versus the large group market, but at the end of the day, what this is causing is it's squeezing the insurance companies, and there has been a trickle-down impact on our agent commissions. And so as these insurance companies have tightened the belt to try to adhere to these very draconian medical loss ratio regulations, they have looked outside of their companies to a large extent and have cut agent commissions. And we have been seeing this across the board, all across the country. Our agents are experiencing commission cuts of up to 50%. And I have to tell you how difficult that is in a tough economy for a small business owner to deal with such a commission cut. And what we think this is going to lead to at the end of the day, certainly it hurts small businesses, but at the end of the day it hurts the consumer, because the consumer needs that advice and counsel from a health insurance professional, particularly with the new environment, the new marketplace that we're seeing created by the Affordable Care Act. If it means that small business owners and insurance agents can't stay in the business, who are those consumers going to go to for their advice?
Regulators and legislators understand the issue, and they understand it's a huge problem. It's how to deal with the issue that some of them are disagreeing on. Many do agree an agent carve-out is the proper way to address it. Others want to take a more pragmatic view and study the issue a little longer, which is a tough thing to do because it already went into effect, and so we don't have a lot of time. It's already affecting insurance firms and the consumer today. In the case of Connecticut, I did meet with Commissioner Leonardi last week, along with the Independent Insurance Agents of Connecticut, President Warren Rupar and State Chairman Tom Wilson. We had a great meeting with him, explained our position on it. He is still studying the issue and trying to understand it, so he makes the right decision on what his viewpoint would be. But we found him to be extremely open to the conversation, understood our position completely, and I think, like a lot of other regulators and commissioners, he's just trying to figure out how to solve the problem.